No matter what your opinion of Bill Gates is, you have to admit that he is a smart man. He has a keen mind for business and is an excellent investor. He became acquaintances with Warren Buffett at an early age and inspired by Buffett's strategy of investing in high-quality companies at reasonable prices, adopted a similar approach. Over the course of the past year, Gates has taken advantage of the stock market's decline by buying additional shares. While we can see the equities he is purchasing for his own account, we can view the purchases made through the trust that manages the funds donated to the Bill and Melinda Gates Foundation. He has spent the trust money on 13 equities over the past year, but only 5 of them account for more than 1% of his portfolio. And so, for today's video, here at The Investing Path, we will be delving deeper into Bill Gates' top 5 stocks and what he gains from them. But before we move forward, make sure to give this video a like and subscribe, and hit the bell button while you're at it to see more of our future uploads. Now, without further ado, let's begin. It is fascinating that he is still reinvesting in the company he founded all those years ago as his top stock holding. He is still investing in Microsoft even though he sold off his shares during the dot-com boom of the late 1990s. Despite his $239,000 gain, he is reinvesting in that stock. Bill Gates' confidence in Microsoft remains unfazed. Now, before we go any further, we'd like to point out that Bill Gates likely discusses the various investments he and Melinda Gates make for their trust with Michael Larson, the trust's top investment officer, which means that Microsoft is the world's second largest corporation right now. It is worth $1.8 trillion, but it has fallen in value along with the rest of the stock market this year, falling to $240 from $336. It has a high PE of 25 and a dividend yield of 1.1%. While Microsoft's share price may be falling, the company's underlying strengths paint a different picture. Whether or not a pandemic has occurred, annual income and profits have been on the rise. The price is down, but the fundamentals still look solid. Therefore, we think that Gates Trust is purchasing it because it seems like the corporation can do nothing wrong. Next, the Canadian National Railway was his foreign buy. He has held this stock for a very long time and is still increasing his holdings. Many investors today view this as a classic value stock from yesteryear. It has been around since 1919, which is quite some time. Its business concept was based only on the long-term viability of transporting essential items throughout North America with relatively little rivalry. It is quite unlikely that CN will lose business anytime soon because no other railroad can simply go and install 20,000 miles of track across 3 coasts like they have. As Warren Buffett would say, "That's a fine moat you've got there." The dividend yield is 1.8%, which is greater than Microsoft's 1%, and the company is selling for $160 per share. But when you look at the revenue and earnings, the picture is not as impressive as Microsoft's. They have just been incrementally increasing their income and keeping their profits stable. From the time they first met in 1991, Gates and Buffett have been close friends. They sat down for a meeting and couldn't stop talking business. So, they both scribbled down at random that they believe focus was the key to their success. Gates founded Microsoft, the world's second largest firm by market cap, and Buffett, who now owns Berkshire Hathaway, the world's 6th largest company. Bill Gates admires Warren Buffett not only as a friend, but also as a brilliant businessman. In fact, it was because of his shared interest that he decided to make an investment in Buffett's Berkshire Hathaway. He invested 9.3% of his portfolio value in it this year, making it his 3rd largest purchase, and it is currently his 2nd largest investment at 23.3%. Now, Berkshire Hathaway is one of our favorite stocks since it is managed by 2 of the finest investors of all time, Warren Buffett and Charlie Munger. Over the years, they have accumulated a fantastic portfolio of company acquisitions and stock purchases. What is fascinating about the Berkshire is that it is one of the only stocks that hasn't dropped in value over the past 12 months, in comparison to its price of $299 per share a year ago. Today's selling price of $309 represents a growth of 3%. We suppose it is successful to put money in the stocks of companies with proven track records. It is well knowledge that Berkshire Hathaway doesn't distribute dividends during market downturns. Even though the company has a market cap of $680 billion, Warren Buffett is skeptical because of the high PE ratio. Pay it no mind at all. The net investment income they had to write off this year skews the figure upwards. The forward PE of 21 is a better indicator of how their earnings will actually pan out in the long run. So any smart analyst would be wise to focus on that number, rather than the historical PE of 8. Overall, it's a high-quality business selling at a reasonable price, which is why Gates keep purchasing more and more of it. After Microsoft and Yahoo, Gates' fourth most loved stock to keep is Waste Management. Waste Management is a North American firm that provides its services to almost 21 million consumers. The business itself is not particularly attractive. In fact, it is fairly ugly. Or perhaps you could argue that without it, the country would be fairly unappealing. There are currently 346 transfer stations, 293 active landfill disposal sites, and 146 recycling plants in operation. The company does important work, and as such, is successful. The United States and Canada have an insatiable demand for this industry, which shows no signs of slowing down. Let's take a look at these stats. Stocks in Waste Management are among those that have held up well despite the market downturn. Currently, it costs around the same as it did a year ago. When compared to similarly steady and slower growing companies, the PE ratio is quite high. Price to earnings is at 29, and price to free cash flow is at 33. The stock, like the majority of Gates equities, also has a dividend. For his final stock purchase, Gates settled on Deere & Co. This was equivalent to 3% of his whole investment portfolio. Again, we will be very frank, it is boring. Producing useful outdoor equipment including tractors, lawn care tools, construction machinery, forestry and agricultural machinery, etc. The company has a simple, reliable business plan. Contrary to the overall market, the price of the stock has risen during the past year. The price increased from $342 to $428. The stocks Gates has picked that have done so well in 2022 are a mystery to me. Except for Microsoft, most of his investments have increased in value, which is more than can be said for the average investor. Whether Larson or Gates is in charge of making investment decisions, the Gates Trust favors equities of long-established companies like Microsoft, Berkshire Hathaway, and Canadian National Railway. These companies have tried and true business models, consistent products, and reliable clientele that will allow them to weather any economic storm. To put it simply, it is a smart investment strategy. He may rest easy knowing that owning successful, high-quality businesses means he can ignore economic fluctuations. To be quite honest, when we look at the equities he bought this year, we don't feel really excited about them. With perhaps the exception of Berkshire Hathaway, the firms are successful, but the market is not rewarding their worth at the moment. Of course, we are all entitled to our own opinion, and maybe you think these are fantastic deals right now, but we're going to keep an eye for Berkshire Hathaway for now. Nevertheless, Bill Gates has done an incredible job in maintaining his stocks compared to other investors. Still, what do you think about his purchase? If you were in his shoes, will you be buying them or not? Let us know what you think in the comment section below, and we'd be more than glad to join in the conversation. But other than that, thanks for watching. This is The Investing Path, and if you liked this video, please make sure to give us a like, subscribe, and hit the bell button as well to see more of our future content about personal investment and financing. Thanks again for watching, and we'll see you in our next videos. Goodbye!